Here's something nobody tells you when you start thinking about buying a house. You can literally borrow your down payment. Most people are sitting on the sidelines thinking that, oh, I need to save for years before I can buy. That's just not true. In this video, I'm gonna break down exactly how that works. And then I'll take you through a few other secrets to homeownership here in Canada that can make a massive difference. Things like how you can buy with friends and put less than 20% down, how you can buy a second home with less than 20% down, different sources of income that you may not even realize you can use to help you qualify, how you can use that 30-year amortization even as a first-time homebuyer, how a rental suite in a property can add up to $100,000 to your qualifying power, and lastly, how you can even buy on a work permit. You don't have to wait for your PR. So if you've ever felt like the system's rigged, well, this video is going to show you the cracks in the wall. Secret number one, borrowing your down payment, also known as the flex down. This one always blows people's minds. There's a program called the Flex Down program, but here's the key. It's not just available to one lender. Many lenders across Canada will allow some different version of this. Here's how it works. You can borrow your down payment from a personal line of credit, a loan, or even your credit card, as long as you can show that you can handle the payments that come with that loan. The lender wants to see that your income and your credit can support the total debt load. That's it. Let's say, for example, you're buying a $500,000 home. Minimum down payment on that is going to be 5% or $25,000. As long as you've got good credit and the income that can support that $500 payment going towards that loan, you could be in that home right now, instead of having to wait 2, possibly 3, 4 years to save up for that down payment. This is what people miss. It's not about how much you have sitting in the bank. It's about how much you can responsibly manage on a month-to-month basis. The Flex Down Payment Program, it's real, it's legal, and it's legit. And it is possibly one of the fastest ways that you can get out of renting, as long as you're financially disciplined. Secret number two, you can still buy with friends and put less than 20% down. People think that when you're buying with friends or family, that it has to be a conventional deal, meaning that you put 20% down or more. That's just not true. With friends, as long as you guys are living in the property, you can get an insured mortgage and put as little as 5% down. With family, only one person has to be living in the property, owner occupying the residence. That's huge, because instead of one person having to save up $30,000, it can actually be split between 2 or 3 people. You share the down payment, you share the mortgage, and you all start building equity instead of throwing money away every month in rent. This is how so many young buyers are getting into the market right now. They team up, they treat it like a business partnership. They split responsibilities and set clear agreements. So with that being done, everybody wins. This is creativity. This is a strategic way to break into the market without having to wait forever. Because I don't need to tell you that you can't buy a house anymore for $50,000. It takes strategy and it takes creativity. Secret number 3, you can use a 30-year amortization even as a first-time homebuyer. Most people think it's 25, but that's just not the full story. If you're a first-time homebuyer putting less than 20% down, you can now stretch your mortgage for up to 30 years under the insured programs. Now this is going to do 2 major things. Firstly, increase your qualifying power. This means that you can increase your purchase price by maybe $40,000 to $60,000 without doing anything to your income. Now, if you're not looking for more qualifying income, it's just going to lower your monthly payment, giving you a little bit more breathing room every single month. Alternatively, if you just want to improve your cash flow a little bit or keep your lifestyle a little bit more balanced, that extra 5 years can go a long way, especially with rates the way they are today. Now, that longer amortization isn't going to affect how fast you can pay off your mortgage. You're still going to have the same prepayment privileges as a 25-year am. Meaning that you could theoretically pay off your mortgage between 5 and 7 years if you really wanted to, even on the longer amortization. The 30-year am is just one of those quiet changes that can completely shift your buying power. Secret number 4, buying a home with a suite can increase your qualifying power by about $100,000. This is one of my favorite strategies because if you buy a property with a legal suite, you can factor that prospective rental income into your qualifying needed for that mortgage. For example, if that suite rents out for about $1,600 a month, a lender will be able to take between 85 and 100% of that and add it back to the income used for qualifying. That means that you now have more qualifying income and can subsequently qualify for more mortgage, usually around $100,000. But the real beauty here isn't just qualifying, it's sustainability. That rental income, well, that's gonna help you cover your mortgage, property taxes, and utilities, giving you that little bit of extra breathing room. So in this case, you're not just buying a home, you're buying an income-producing asset that's gonna help pay itself off. Secret number 5, you can use alternative income streams, and yes, they do count. This one is a game changer because most people don't realize how many different types of income they can use to qualify for a mortgage. You can use CCB, which is Canada Child Benefit. You can use long-term disability income. You can utilize part-time or secondary job income, as long as you have a 2-year history showing its consistency. And same thing with commission. As long as there's a history showing its record, you can use commission income. And yes, self-employed income is no problem. Whether you're sole proprietor or incorporated, there's many different programs and strategies we can utilize to use your self-employed income. You don't even necessarily have to have 2 years of consistency, just 2 years being self-employed. Lenders will of course want to verify this income via a specific set of documentation, but the policy and regulation here in Canada dictates that all those streams can be used, given different circumstances. That's why it's absolutely crucial to work with someone that knows the rules of the game, because if your broker or banker doesn't, you might be leaving qualifying on the table for absolutely no reason. Secret number 6, you can buy a second home with less than 20% down. Here's another one that shocks people. You can actually buy a second property, second home with less than 20% down. So the property has to be for personal use. That means a family member's living there or its use as a vacation home. But as long as those guidelines are met, you can qualify under certain programs with as little as 5 or 10% down. So think about it. Maybe your parents want to help your younger sibling, or maybe you just want to buy in a smaller town to get away for weekends or remote work. You don't have to wait till you have 20% down sitting in your bank account before you can make that happen. As long as it's not a rental, lenders will view it as a secondary owner-occupied property. That opens up a ton of opportunities that most people have never even heard about. Last but certainly not least, secret number 7. This one comes with a pretty big caveat, but this is buying a home on a work permit, because it is possible. Even if you're not a permanent resident or a citizen yet, you can still buy a home here in Canada with a valid work permit. The big caveat is that here in British Columbia, you will be subject to the foreign home buyer's tax, which is 20% of the purchase price. Now, this is specific to BC and not necessarily applicable to every other province. Now, if you have multiple people on title and only one of them is on a work permit, the person on a work permit will only be subject to foreign home buyer's tax on the portion of ownership they retain on title, so it won't be on the entire purchase price. With all of that being said, this can be a real stepping stone helping newcomers get into the market. It's about getting early and building momentum, not necessarily waiting until every condition is perfect. The truth is, most people never hear about any of this. School doesn't teach you, and the bank certainly isn't educating Canadians. They think home ownership is out of reach, but that's just because they're listening to the wrong people. You don't have to rent forever. You just have to know the rules and how to use them to your advantage. That's what this channel is about, cutting through the noise and showing you how you can actually make this home ownership thing work in your best interest. If you're thinking about buying a home, whether it's your first, your second, or you're just trying to figure out what is possible, reach out. Shoot me a message, book a call, or drop a comment below, and let's talk through your options. I would also love to hear, which of these secrets did you hear about for the first time in this video? Let me know in the comments. But to summarize, if you learn the right things, make the right moves, and align yourself with the right people, you can likely get into the market sooner than you think. So don't be a statistic, and have a great day.